3 weeks have passed since we've made a video about buying SoFi's call options, and since then we're up almost 50% on our position. Recently, SoFi's investors got some massive news, both coming from their quarterly results and, of course, the news on how the new administration may impact the SoFi's business. So basically, we decided that right now will be the perfect time to make another updated video on SoFi. In the end of this video, we will, as always, discuss what to do with the stocks of the company. Hey there, and welcome to the Market Monkeys channel. It's Julie here, and today's video I want to start from the recent news. All of us know that SoFi recently reported incredible earnings result. We even have a video with earnings breakdown on our channel, but what it means for the stock of the company and where the stock price is heading. To answer this, a few important things. The company reported adjusted net revenue at a record $689 million, beating the expectations by $55 million. That's a 30% year-over-year increase, up from 22% in second quarter. It's very important to really pay attention to this growth rate. 30% growth in revenue year-over-year, it's impressive as it is, but adding to it 22% in the previous quarter, we are getting that this growth not only staying very high, but also accelerating from quarter to quarter. So this is really important thing to pay attention to in the few upcoming quarters, because if the company can keep it up the same way as it is right now, I think the stock of this company will make us really happy, because it will continue growing with an amazing speed. And the reason for this is very simple, because the valuations of the companies are usually based on the expectations for the future cash flow, and strongly growing revenues are really helpful in this matter, and the amount of risk that this investment holds. And about risks we will talk a bit later, but right now we can definitely say that the new Trump's administration will for sure impact fintech and SoFi as well, but to what direction? For example, Trump had previously said that he believes presidents should have say on the Fed's interest rate policy, so it is possible that he will try to influence the rate cuts to bring them to the smallest levels possible, and if it happens, of course, business of the SoFi will flourish on this news. Another thing is Trump's deregulation policies, which are expected to make the lives of banks much easier. Confirmation of this is the fact that bank stocks grew significantly right after the elections. If you find this information valuable or interesting, don't forget to press a like button and subscribe to our channel. SoFi's EPS, or earnings per share, came at about 5 cents, beating consensus estimates by a cent. In the fintech world in general, beating expectations is already a big win, especially for companies that's still expanding its customer base and portfolio, so beating the expectations by 1 cent, it's pretty good. By the way, about customer growth, the company added 756,000 new members this quarter, which is a 35% year-over-year increase, bringing its total membership to 9.4 million. This is massive because new customers mean potential new revenue streams from various products of the company, and this is something that management of the company is looking forward to. We basically know this from approximately February 2022, when the management of the company wrote that they see SoFi as a one-stop shop that will serve as an improved replacement for people's current bank. So this is not a new goal, and this is something that they're working on already for a couple of years. And I need to say that in my opinion, one of the smartest moves that the management of SoFi is making is diversifying their revenue streams. Currently, their non-lending segment make up 49% of the company's revenue, up from 39% just a year ago. This transition is significant for a couple of reasons that we will talk about now, but as we already said, it's something that the management of the company is trying to achieve, and it's actually working. So the revenue from services has been on the sharp move upwards. In the third quarter alone, revenue from services reached $238 million, which represents a 102% growth year-over-year. This sector alone now accounts for more than 1/3 of SoFi's total revenue. That's a big milestone because it shows a growing dependency on a revenue stream outside of lending, and this is actually amazing because lending, while being profitable, brings a lot of risks. especially in the times when interest rates are unstable as they were in the past few years. And another funny thing, right now I'll read something that Anthony Noto said on the earnings call, and I think it's pretty interesting. So he said, we've achieved 17 of 19 quarters of record revenue through a recession, a pandemic, a 150 basis point rate drop, damage to our largest and most profitable business, student loan refinance, only to face a 500 basis point increase in rates and the collapse of vulnerable financial institutions in our neighborhood. Today, we face fewer headwinds than at any point in our history. We are heading into 2025 with the most favorable conditions of the last 7 years, with declining rates and a stable economy. Funny, right? In the middle of all of the wars and all of the other disasters that are happening. But okay, let's continue reading. With the most diverse business we've ever had, with more members in our ecosystem and more products that serve their needs than ever before. This is definitely a very, very optimistic outlook for the future, but it basically means that the management of the company realized that they went through very difficult times with this high interest rates with their lending business and decided to heavily work on fixing it, and it's actually happening and it's actually working. The strong growth in services also contributed to SoFi's higher profitability. As a higher margin business, services add a more stable and a more lucrative revenue stream, which also boosts SoFi's overall earnings quality. Another great benefit of services is the thing that we actually already mentioned before in this video. It's this one-stop shop strategy. SoFi services act as a gateway within SoFi's ecosystem, which means that customers are more likely to stay within SoFi for a range of financial needs. For example, they want their clients to use them not only as a bank, but for example to order a credit card, maybe to open an investment account or to take a loan, or maybe even everything together. Another great piece of news that the management of the company is not stopping here. SoFi's management is committed to expanding services even more. They made it very clear that they're planning on growing this proportion of revenues from services even further. This is a very important piece of news for us as for investors, because as I mentioned in the beginning of this video, the valuation of the company, the valuation of the stock is usually based on the expected future cash flows combined with the risks that this investment holds. So before this, we already proved that revenue is growing faster and faster. So basically these expected future cash flows are getting bigger and bigger, and this is a big plus. Probably new administration is lowering risks for SoFi, but this is not for sure. But the thing that we can be sure in is that the management of the company is working really, really hard to minimize the business risks for themselves, and by this they're automatically minimizing the risks for us as for investors. So basically, if the valuation of the company is these two pieces, future cash flows and the risks, and cash flows are for sure getting bigger and the risks for sure getting smaller, we get that the valuation will probably get higher and higher. Of course, if we will not get some very bad news or if nothing bad will happen in the near future. SoFi's management raised their guidance both for adjusted net revenues and EBITDA for the third time this year. They now expect to achieve between $253 billion and $255 billion in adjusted net revenue, which is $85 million higher than the prior guidance range. This implies 22 to 23% annual growth versus 17 to 19% previously, which is obviously amazing news for investors of the company. Also, management now expects to deliver adjusted EBITDA of $640 to $645 million, above prior guidance of $605 to $615. This represents a 25% adjusted EBITDA margin. Okay, so before we go to the discussion of what to do with the stocks of the company, I want to mention another thing, and this another thing is the target prices that analysts are giving SoFi right now. So most of the reports from the analysts are coming with a buy rating right now, although Wall Street analysts are still pretty low on their price targets. Here we can see that the low price target is at $4 and the high is only 14, giving us the average price target of about $10. Right now, when I'm filming this video, the company is trading at approximately $12 per share. To be honest, I expect that Wall Street analysts will start increasing their target prices for SoFi in the near future, given their great results, their right goals for the future, and their updated guidance. Of course, no stocks are without risks. In few of our previous videos, we talked about the risks that we are cautious about when investing in SoFi, and for now I remind you, we wouldn't be buying SoFi for a long period of time. The reason for this you can go and check out in our other videos, but another risk that we did not talk about yet is this customer momentum. A slowdown in customer acquisition could impact their ability to grow, and this could directly impact the price of the stock of the company. Additionally, if margins, for example, don't keep expanding, analysts will more likely change their valuation to more negative territory, and it may impact the price of the stock negatively as well, but for now it's not happening. For now everything is fine. SoFi's third quarter report shows robust growth and a clear path to even higher profitability. By the way, SoFi is one of the few fintech companies that actually can achieve strong growth and profitability together. It's something that is pretty rare, and that's why investors actually love this company. So there you have it. SoFi continues to deliver on their promises about faster revenue growth, strong customer acquisition, and improved profitability. If you're looking for a high-growth fintech with a promising future, SoFi might be the company to take a close look at. But in our previous videos, as I already mentioned, we spoke about risks investing in this company. And one of those risks is actually the fact that I'm not sure if we can actually say that SoFi is a fintech company, because most of their revenues are coming from banking after all. So here you have a fintech company that the fin part is growing very nicely, but the tech part is far behind. If a SoFi would be valued as a regular banking company, their valuation should be much lower than it is right now. But with a current valuation of PE about 100, they must be growing this tech portion of their business much stronger than they're doing right now. Anyway, more about this you can find in our previous videos on SoFi. This is the reason why we are not holding the company for a long time, but right now they have a nice momentum, they're growing nicely, they just posted nice results, so that's why we're holding call options of this company for short term. And for now we're not planning to buy the stock for the long term. What to do with all of the information provided, as always, is on you. My job is to deliver interesting information or the information that is often left out and to explain my point of view. Write a comment so I know that you are real on that side of the screen. If you found this information helpful, interesting, valuable, don't forget to press a like button and subscribe to our channel. I'll see you on our channel next time. Happy investing!